What if I told you one metal may quietly become one of the most important strategic assets of the next decade? Not gold, not silver, copper. The same metal used in power lines and construction is now becoming the backbone of electric vehicles, AI data centers, renewable energy, and global infrastructure. And while most retail investors are still focused on tech stocks and crypto, smart money has been watching copper very carefully. In this presentation, we'll break down who controls global copper production, why demand is exploding, which companies dominate the market, and most importantly, whether copper could become one of the biggest investment opportunities of the coming years. My name is Poria, and let's start with global copper production. Chile is by far the largest copper producer in the world, responsible for roughly 40% of global production. Peru comes next, followed by China, Congo, and the United States. One important thing investors should notice here is concentration risk. A massive portion of the world's copper supply comes from only a handful of countries. That means political instability, labor strikes, environmental regulations, or export restrictions in these regions can heavily impact global copper prices. This is especially important because copper is no longer just an industrial metal. It's becoming a strategic resource tied directly to electrification and economic growth. In simple terms, the world needs more copper, but supply is geographically concentrated and difficult to expand quickly. Now let's look at the companies dominating global copper production. Names like BHP, Rio Tinto, Freeport-McMoRan, Glencore, and Codelco control enormous mining operations across the world. These companies are not just mining businesses anymore. They are becoming critical suppliers for the future energy economy. As electric vehicles, renewable energy systems, and AI infrastructure expand, these companies may benefit from long-term structural demand. However, mining is also a difficult industry. Copper companies face challenges like rising operational costs, geopolitical tensions, environmental pressure, and declining ore quality. This means not every copper company will perform equally. Some firms have diversified operations and stronger balance sheets, while others are more exposed to copper price volatility. For retail investors, one of the easiest ways to gain exposure to copper is through publicly traded mining companies. In the United States, companies like Freeport-McMoRan and Southern Copper are among the major names. In Canada, firms such as Teck Resources, First Quantum Minerals, and Hudbay Minerals are important players. Each company has different levels of risk. Some focus mostly on copper, while others are diversified across multiple metals. This is important because diversified miners may provide more stability during commodity downturns, while pure copper companies may offer stronger upside during bull markets. For investors, understanding business structure is just as important as understanding the commodity itself. Copper impacts far more industries than most people realize. From mining and construction to renewable energy, electric vehicles, manufacturing, telecommunications, and infrastructure, copper is deeply integrated into the global economy. This creates a powerful economic ecosystem around copper. As demand rises, it doesn't only benefit mining companies. It can also impact engineering firms, industrial manufacturers, logistics companies, infrastructure developers, and even financial markets. This is why many analysts view copper as a global economic indicator. When copper demand rises strongly, it often signals industrial expansion and economic growth. Not all copper companies operate the same way. Some are large, diversified miners like BHP and Rio Tinto. Others are pure copper producers that depend heavily on copper prices. And then there are junior exploration companies, smaller firms searching for future discoveries. Junior miners can offer extremely high upside potential if they discover valuable deposits. But they also carry a much higher risk because many projects never become profitable mines. This is where risk management becomes critical. Conservative investors often prefer established producers, while aggressive investors may allocate a smaller portion of capital to speculative exploration companies. Before we continue, if you haven't watched the silver video yet, you can click the card above to watch it. One of the strongest bullish arguments for copper is demand. Copper is essential for electrical wiring, renewable energy systems, electric vehicles, AI data centers, and modern infrastructure. An electric vehicle can require several times more copper than a traditional gasoline vehicle. Massive expansion in renewable energy grids and AI computing infrastructure could dramatically increase global copper consumption over the coming years. This is why many investors believe copper demand may continue growing for decades. The modern world is becoming more electrified, and electrification requires copper. This brings us to the investment thesis. Many analysts believe copper may be entering a long-term structural bull market. Demand is rising rapidly because of electrification and infrastructure expansion. At the same time, new copper discoveries are becoming more difficult and expensive. Mining projects can take many years to develop, which means supply may struggle to keep up with future demand. If that imbalance continues, copper prices could remain elevated for an extended period. However, investors should also remember that commodity markets are cyclical. Copper prices can experience sharp volatility during economic slowdowns or market corrections. This is why position sizing and long-term thinking are extremely important. From a technical perspective, certain copper price levels may become psychologically important for traders and investors. Support zones represent areas where buyers may step in aggressively. Resistance zones are levels where selling pressure could increase. If copper breaks above major resistance levels with strong momentum, many traders may interpret that as a bullish continuation signal. But if prices fail to hold support levels, short-term volatility could increase significantly. Technical analysis should never be used alone. It works best when combined with macroeconomic trends, supply-demand fundamentals, and risk management. Don't forget to subscribe, turn on the notification bell, and leave a like. This presentation is for educational and informational purposes only and should not be considered financial advice. Every investment carries risk, especially commodity-related investments. Before investing, always do your own research, understand your risk tolerance, and consider speaking with a qualified financial professional. If you found this presentation valuable, don't forget to support the channel. And remember, sometimes the biggest investment opportunities are hiding in the industries the world cannot function without. Thank you for watching.